All right, guys, so we are looking at identifying a valid change of character. And we are going to be looking at what a change of character is for those who are completely new and never heard of the term. All right. So we are going to first look at what makes a change of character valid for us to trade. And there are certain aspects of a valid change of character. There are certain conditions that have to be met. First of all, the first condition that has to be met is that there has to be a mitigated area of value at a higher time frame. It has to be a higher time frame. Second condition has to be in a bullish trend, a significant higher low must be taken out with a candle body, not a wick. All right. In bearish trend, a significant lower high must be taken out by a candle body, not the wick. All right. It must be closing with the candle body, not the wick. All right. And we're also going to be looking at what scenario a change of character is considered invalid, because sometimes it may look like a change of character, but it's actually invalidated by certain aspects, which I'm going to be sharing here. All right. So also we are going to be looking at how we can effectively enter the market. When the price action forms a change of character, we are going to be looking at how we can effectively enter every time. So let's look at a bullish is where you have higher highs, higher lows, higher highs, higher lows, higher highs, and then higher low, and then you have a change of character, something like this. So I'm going to be showing you how that happens. Okay, so there is a change of character. Why? Because this higher low has been taken out. Okay, this is a higher low here. This higher low has been taken out by this new price, and that closed below this previous higher low. It has to close with the body of a candle, not the wick. If it is a wick, then it is invalid. So we have that new price here. Okay, so up here, because there's a change of character here, it means there is now a resistance level, valid resistance or supply zone up here. Now this is a resistance level over here. All right, so that resistance level, okay, becomes very strong supply area because there's a change of character here that has happened. Okay, and now we are still going to confirm if this is a valid change of character for us to trade. So we are waiting for a reversal from here, this price to return to this area, okay, this supply zone or this resistance, before we can look for our candlestick patterns indicating a downward momentum, so that we can sell all the way to the downside. So we are waiting for that kind of scenario to happen so that we can sell after a confirmation of candlesticks like a bearish engulfing candle, 3 black crows, or double top at this resistance level. Place our stop loss just above the resistance there. If there is a liquidity sweep, then we wait for the liquidity sweep or fake out to happen, and then we place our stop loss just above the liquidity sweep wick, and then we place target a 1 to 2 risk to reward ratio to the downside. Okay, something like this. This is what the scenario we are looking to trade, because now this is a valid change of character. This is a valid change of character. Why? Because this area of resistance here on a higher time frame has been mitigated, meaning that the price returned to close off this area, to gather liquidity from this area, because lots of sellers are here at this area of resistance. So this was a higher low. It was taken out here, okay, and the price closed below with a candle body, not the wick, and it reversed all the way to the upside and mitigated the area of value at resistance. And this is a supply zone at resistance before we could place our trade. Okay, this is our entry zone. So this would be our entry area after confirmation. This would be our entry point after confirmation with candles at a lower time frame. Now, if you are looking at this from a 4-hour time frame or a daily time frame or 2-hour time frame, then you are not going to place your trade or enter at a 4-hour time frame. No, you are going to go down to the 15 minutes time frame and look for your entries when the price gets here at resistance. A bearish trend, it's just the opposite. We have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Okay, and then we have something happening like this. Okay, So this would be also a valid change of character to the downside would be something like this. So in a bearish trend, the change of characters happened here. Okay. The lower high has been taken out. Lower high here. This is a lower high. This is a lower high here. It has been taken out by this new price here, which has closed with a candle body. It must be closing above here with a candle body, not a wick. All right, not the candle wick. It has to close above. So when that scenario happens, then you are waiting for two more scenarios to happen. All right. So what you are waiting for is for the price to return to this area of demand before you can buy all the way to the upside again, before you can buy, okay, to the upside. So we are waiting for something like this to happen. All right, we're waiting for something like this to happen. Below here, because there was a change of character, it created here a pool of demand down here. There is a pool of demand down here. So this is a demand area where there is buy orders here. So when this change of character happened here, it created this, it made this demand area more valid, where the price reversed to cause change of character. So now you make that confirmation on a lower time frame and enter from the demand area. Target a 1 to 2 risk to reward ratio. Place your stop loss. Okay, place your stop loss just below the liquidity sweep area. If there was a liquidity, usually there is a liquidity sweep below this area. Okay, below this demand. Okay, so you wait for that liquidity sweep to happen, if at all, then you confirm your candles for a buy, all right, at a lower time frame. So this is how you would trade this. So this is a valid change of character. This is where you would enter at. Okay, this would be your entry. Okay, at lower time frames, time frames. Okay, so entry happens at lower time frames. Okay, and this would be a valid change of character for the bearish scenario. So now let's move on to what we should not do in an uptrend. Let's say this is a higher high, higher low, higher high, higher low, higher high, higher low, and then we see a change of character happening like that. Okay, a break below the higher low. Okay, we will not be quick to conclude, but we will see that this is hanging. If this is hanging, if this is a resistance on a higher time frame, let's say this is our resistance on a higher time frame. This is our resistance on a higher time frame. Okay, like this, if this is a 4-hour time frame, let's say, just an example, if this is a 4-hour time frame and we have our resistance here, if this higher high, if this higher high, all right, if this higher high has not touched the higher time frame resistance area, then this change of character is invalid, because we cannot trade based on something that is hanging. Okay, it has to be something, it has to be a price action that touches our area of value at a higher time frame, in this case the resistance. But we see that the higher high has not touched the resistance at higher time frame. It is just hanging here. So this change of character here, all right, this change of character here is invalid. This one is invalid change of character. We will not take any action here. All right, we will not take any action here. Some traders, when they see this, they want to assume that because this higher high is close to the higher time frame resistance, then this change of character is invalid. It is not valid until there is a touch in that higher time frame resistance area or area of value. Okay, so this is in the bearish scenario. This is an invalid change of character price action. Okay, this is invalid. Okay, that is invalid. It must touch the higher time frame resistance for it to be a valid change of character. Okay, take note of that. Also, in another scenario, it could touch. Okay, it could touch. Let's say it touches there. All right, let's say it has touched the resistance up there. All right, okay, and it gets to this area, and then you see a manipulation like this. It gets here and then forms a double, it forms a double top, forms a double top here before breaking below here. All right. Some traders jump in immediately. This is very dangerous. Okay. This could make you lose money. Yeah. Some traders consider this a double, when they see a double top at here. Okay. And then you quickly jump in for a sell position. You jump in for a sell position here. Okay. And place your stop loss just above there. Okay. And consider a 1 to 2 or 1 to 3 risk to reward ratio all the way down here. Okay, let's say this is the trade you have decided to take because you have seen that the price has broken below, here, and there is a double top here. So you jump in, okay, for a sell. Now, what is going to happen here is that the price will get to this level and return to mitigate this higher time frame resistance area. It's an area of value of supply. There are so many sell orders up here. Okay, so it will return to mitigate this area, taking out your stop losses. It takes out your stop loss here because you jumped in for an early sell. It takes out your stop loss, mitigates this higher time frame supply zone before it drops all the way down. So you bought at the wrong time and in the wrong place. So you should have waited for a mitigation up here, mitigation of the higher time frame resistance or area of value before you could sell to the downside. This is what you would wait for. Always be patient. Patience is key. All right. So this would be an area where you would not trade, okay, until there is a mitigation of this higher time frame area of supply. You are not taking any trade. You are just being patient. You are waiting, no matter what happens in the middle here. After the change of character, you are just waiting for this to return to mitigate the higher time frame area of value here at resistance before you can go to your lower time frame like 15 minutes or 5 minutes to place your entries after confirming your candlesticks to the downside, either bearish engulfing or 3 black crows or double top. This is a bearish scenario. Lower low, lower high, lower low, lower high, lower low, lower high. Okay, and then this lower high has been taken out. Okay, there's been a change of character right here. There's been a change of character here. Okay, and now price has taken out this lower high, and now it has formed the high price over here. All right, so this is a change of character. Let's say this is our support area at higher time frames. Okay, these are support area, but the price, the lower low, this lower low here, right here, this is our lower low. Okay, this lower low has not touched the higher time frame support. Let's say this is a 4-hour or daily higher time frame support. Okay, so if it has not touched here and is just hanging, we are going to consider this change of character invalid, and we are not going to trade this price action change of character. We are not going to trade it. Okay, you ignore it until you see a confirmation for a really valid change of character, like I've showed you in the beginning of this video. So this one you will not trade. Okay, this one is an invalid change of character. This one is invalid. If the scenario is like this, if this higher time frame was touched by the lower low, okay, if it was touched by the lower low here, okay, this makes this valid. Okay, this is a valid change of character, but we are waiting for another confirmation. If this happens, if this had happened like this, wait, if this had happened here, okay, if this had happened something like this, okay, had happened, okay, this would still be a valid change of character, but there are some people, early buyers, who took their buys from here because they saw this as a new demand zone. they saw this as a new demand zone. This area, when they saw a pattern like a double bottom, they thought this is now a valid area of demand. Okay, they thought, oh, this is an area of demand, and they started to buy prematurely here. So when you place your buy order here, okay, when those people place their buy orders here, place their stop losses just below here, okay, and target a 1 to 2 or whatever. All right, they are buying so early. They are buying so early. Guess what happens in most cases? Because this is a demand area at support, higher time frame. Here, this is a demand area, okay, where there's a lot of demand at higher time frames. Okay, so this support has to be mitigated fast before you can buy. All right, so there's a lot of demand at this support. So guess what happens when you buy prematurely here, like the price can return to mitigate here, okay, before rallying all the way to the upside. So you should be patient enough to wait for this support to be mitigated or demand to be taken out. Liquidity also is gathered below here after this change of characters happen. So don't jump in to buy prematurely when you see a manipulation in between here. All right, always wait for the price to return to mitigate the higher time frame demand area or supply for you to sell or buy. I hope that is clear. So you would have bought from here. This would be the right place to buy. Okay, this would have been the right area to buy at. All right, you would have bought from here. After a confirmation, you don't buy at higher time frames. Okay, you wait for a confirmation. Okay, with candlestick patterns like bullish engulfing, double bottom at the higher time frame demand area. So you place your stop loss just below. If there was a liquidity sweep below here, okay, usually there is a liquidity sweep down here. So you'd wait for that to happen and then place your buys when there's a confirmation with candlestick patterns like bullish engulfing candle or double bottom or whatever candles you are using for your confirmation, 3 white soldiers, okay, and that candle to the upside. So you would place your buys there. So that would be the right place to enter the market.